In the last video, we began looking at the federal budget, and we started on the tax side. We looked at the three major sources of tax revenue for the federal government, and we started looking into the first of those three, individual income tax. So in that video, we went through kind of all of the different aspects of it. In this video, we're going to actually put those to practice and actually do an example of them. All right, depending on how long it takes us to work through this example, we might also cover the other two, which, as I said in the last video, we're going to spend much less time on. All right, but first, all right, let's draw our attention to the board. This is kind of, I've just written out tax brackets for a single filer, right? And this is for the current year, so kind of the 2020-2021 year. All right, really it's just for 2020, but you would be filing it in 2021, right? So here we can see the different rates, and this is also for a single filer, all right? I'm going to post a PDF. I mentioned this in the last video, but I'll mention it here again. I'm going to post a PDF or some kind of document with these different tax rates on them, all right, or these tax brackets, so that you can have it in front of you as we're talking about these. But I did want to go ahead and put these up so I can actually point at some stuff, all right, while I'm talking about them. All right, that being said, you also notice, all right, this is for single filers. There's also kind of a different bracket system for people who are married filing jointly, so filing together. All right, people that are married and filing independently or separately, and it looks very similar to the single. And then there's also a different set of brackets for people who are the head of households. All right, looking at this, we have all of our rates, and then we have our brackets. So the way you are going to go about calculating how much you're going to pay in taxes, or your average tax rate, right? One, we're going to take our income, we're going to take out any deductions so that we have our taxable income. And then we're going to look at these brackets, and we're going to see where that taxable income falls, all right? So if it falls in between $9,876 and $40,125, then your marginal tax rate is 12%, right? So if you earned one more dollar while in the middle of this tax bracket, that dollar would be taxed at a rate of 12%. Right. However, your average tax rate is not 12%, right? Because only the money in this bracket, right, is going to be taxed at 12%. Right. So for the 10%, your first $9,875, or if you don't make it up that high, just however much you earned, that's going to get taxed at 10%, right? Then if you have a higher income than that, right, for this next bracket, 12%, right, then the most that you're going to be kind of, if your income goes all the way through and into a higher bracket, right, let's say it does. Let's say your income is $200,000, right, so it's well down here, right? Well, for this rate of 12%, you're going to be paying, right, that 12% rate on the $30,249 that is in this tax bracket, right? Then you would pay 22% on all of the money that falls into this one, so on and so forth, right? So your income, right, or your tax rate, right, is not going to be 32% for that entire amount, right? The money that falls into each bracket is going to be taxed at that rate. All right, so whichever kind of bracket we fall into, that is our marginal tax rate, right? And then to find our average tax rate, we actually have to figure out the payment, right, the tax payment, and divide it by our income. All right, so let's go ahead and look at an example. All right, so let's say that we have a single filer with an income of $75,000, and we're going to say they're taking the standard deduction, which is $12,200. All right, so ultimately, kind of for a question like this, you're going to be asked for the, you might be asked for the marginal tax rate, you might be asked for any of these different things, but if you're asked for the average tax rate, you're going to have to find all of them to actually get to that average tax rate. All right, so let's go ahead and get started. The first thing that we need, I keep saying that, the first thing that we need is our taxable income. All right, so we know that our taxable income is our income, and actually I'm going to move this down here so we have enough space. All right, so $75,000, and then we're going to subtract from that any exemptions or deductions, right? So we're saying that they're taking this individual is taking the standard deduction, right? So we're going to subtract $12,200. All right, that's going to give us a taxable income of $62,800. Now we can look at our tax brackets, all right, for single filers. We're going to see that this 62,800, not 628,000. All right, so $62,800. That's going to fall into our third tax bracket, so the 4126 to 85,525, which is taxed at a rate of 22%. All right, so we can already jot down our marginal tax rate. Right, it's 22%. If this individual earned an additional dollar, right, that dollar would still be in that tax bracket, and so they would be taxed at a rate of 22%. Right, but we don't want to stop there. We want to also find the average tax rate. So the next thing that we are going to have to do is we're going to have to figure out the tax burden. All right, so for our tax burden, I'm going to go ahead and erase this stuff. All right, so to find out our tax burden, we're going to take this taxable income and we're going to look at the amount that falls into each bracket, right, and how much tax is owed for that. All right, so for example, all right, we are doing an example. This is all for example. All right, so that first $9,875, that is taxed at 10%. All right, so 10% times 9,875. I would recommend just do 0.1. All right, instead of trying to do 10% in your calculator. All right, I'm actually, if that's the way I want you to do it, I'm just going to write it that way. So 0.1. All right, then we look and we look at our next bracket, so $9,876 to $40,125, right? Well, our taxable income goes through all of that, so that entire amount, that whole kind of section, right? The $30,249 between those two, the kind of the upper and lower boundary of that bracket multiplied by its tax rate, all right, which is 12%, so that'll be 0.12. Then finally, all right, in the next tax bracket, we see that our income does not go all the way through this bracket, right? So we're in the bracket where we got our marginal tax rate, and so we're not just going to take the endpoints and subtract them, because take the high end minus the low end. All right, what we're going to do instead is we're going to take our taxable income, so $68,200, and we're going to subtract the lower end of that bracket, so $40,126. All right, so this is going to give us the amount of money that actually falls into that bracket, because that's only the money that falls into the bracket is taxed at that rate. And the rate in question is 22%, or 0.22. Once we have all of that, all right, punch all of this into our calculator, and we should come up with a tax burden of $9,605.66. All right, so that's our tax burden. We would then go on to look for our tax payment. In this case, we didn't have any credits. I didn't state any credit. So in this case, the tax burden and the tax payment are equivalent because, well, right, because if we don't have any payments, that's just how that works. All right, so our tax payment is also $9,605.66. And we can go ahead and find our average tax rate. By taking our tax payment and dividing it by our total income. All right, so our total income is $75,000. All right, and that's going to give us a tax rate of 12.8%. All right, so we can see that there is a pretty big difference between the average tax rate and the marginal tax rate. The average tax rate is much lower, again, because you're only getting taxed, the money that falls into the bracket is being taxed at that rate. All right, so, and that's how that goes. So that first $9,875 taxed at 10%, the next $30,000 and whatever dollars, that's taxed at 12%, so on and so forth, right? So there is a misconception that if you start earning more money or you get more money, you're going to have to pay more in taxes. And while that's true, right, kind of the idea is that you're going to be worse off, and that is not the case. All right, you're not going to be made worse off by your income rising. That's not the way the United States tax system works. All right, let's look at one more example, and then we will move on. All right, so we're going to say that this is a couple that's married and filing jointly. Their income is $213,000. They are going to take the standard deduction which for a married, for someone married filing jointly is $24,400. And we are going to say that they have 3 children, and there is a $2,000 credit for each. All right, so I don't think I mentioned children being tax credits when we were going through that, but that is the case, right? Any dependents you can claim, right? You get a tax credit for it, for them. I shouldn't refer to children as its. All right, so the first thing we need to do is we need to find our taxable income. All right, so we'll take our total income, that $213,000. We're going to subtract any deductions or exemptions. All right, we have one deduction, it's the standard deduction. So $24,400. That is going to leave us with a taxable income of $188,600. All right, so our taxable income, pretty easy to get, but that is what we have. All right, once we have that taxable income, we can then go to our our table that has our tax brackets and our tax rates. We can figure out what our marginal tax rate is, and then we can also start calculating our tax burden. All right, so for our marginal tax rate, this $188,600, that falls into the fourth bracket. All right, which is taxed at a rate of 24%. So our marginal tax rate is 24%. All right, then we can go and get our tax burden. All right, once again, we're just going to be taking the amount of money that this couple has earned and however much falls in each bracket, multiply it by the tax rate. All right, so the first rate is 10%, and it's just like with the other one with the single, but it goes up to $19,750. All right, so if you have looked at that PDF with the other tax brackets, or if you're just seeing me write this up now, right, for the married filing jointly, right, those brackets are much wider for those different percentages. Also, our standard deduction was much higher, right, twice as high actually, if we want to just go with that. All right, so that first $19,750 is taxed at 10%, right? And then the next portion of their income that falls in the second bracket, so the $19,751 to $80,250. All right, so that's $60,499 that is in that second tax bracket. All right, that is being taxed at 12% or 0.12. Then we move down to the next tax bracket. The upper end on that one is $171,050. So our total or taxable income surpasses that. So it's the entire thing. I don't think I'm going to fit it in right there. All right, so the amount of money that falls in between that tax bracket is $90,799, and that is taxed at a rate of 22%. Right. And then finally we get to the fourth tax bracket. This is the one that where we got our marginal tax rate from. So this is where we have a tax rate of 24%. Our taxable income falls in the middle of this bracket. So we're not going to just take the entire amount that's in that bracket. What we're going to do is take our taxable income, $188,600. We're going to subtract the lower bound, so $171,051. All right, so that's going to give us just the amount of income that falls into this fourth bracket, and we're going to multiply that by 0.24 or 24%. All right, once we have that all down, we're going to punch it into our calculators, and we're going to find a tax burden of $33,422.42. So $33,422.42. That is our tax burden. Right now, the next thing that we would need to do is look at the tax payment. In the last example, the burden and the payment were the same thing because that individual did not have any tax credits. However, this couple does have some tax credits. All right, so we're going to take our tax burden. And actually, I'm going to put that down here just in case. All right, so $33,422.42. And then we're going to subtract the number of tax credits. All right, so, or the amount for the tax credit. So if they have a $2,000 credit per child and they have 3 children, that means that they have $6,000 worth of tax credits. All right, so we subtract the value of those tax credits from the tax burden. That leaves us with $27,422.42 as the tax payment. And now that we have that tax payment, we can find our average tax rate. All right, by taking our tax payment, $27,422.42, and dividing it by our total income, which was $213,000, and that is going to give us an average tax rate of 12.9%. I did not mean to make these the average tax rate very similar for the first and second example. It just kind of happened that way. All right, but that is how we would go about finding all of those different things, right? Our taxable income, our marginal tax rate, tax burden, tax payment, and our average tax rate. All right, so this video is already kind of long, so we're going to call it there. We will, in the next video, we'll finally get to those other 2 types of taxes, all right, those 2 other major sources of tax revenue. Again, as I've said a couple times, it's not going to take us very long to go through those. So we'll also just wrap up this section on taxes by looking at the different tax systems. All right, but that's it for this video, and I will see you in the next one.